Welcome to Libertex. Crude oil prices have seen an amazing start to the year, hitting highs on March 8th that signaled a 40% growth year over year. But just several weeks later, things took a turn for the worse. On March 18th, WTI crude plummeted over 7.5% from around $65.50 a barrel to the low 58s, following one of the biggest market sell-offs for oil since the new year, and the biggest one-week fall since October of 2020. There were a number of reasons this took place, and we'll be breaking down each of them. But more importantly, we'll also be breaking down the charts to reveal how oil has been trading since, to get an idea of where crude oil will go in April. Was the sell-off an overreaction, or has the bull trend we've experienced since November finally run out of steam? Stay until the end for the information you need to consider trading crude oil for April. So without further ado, let's get started. Since the end of October, crude oil prices have been on a nice uptrend, ultimately coming to highs not seen since before the pandemic. The commodity has provided traders with many opportunities this year, but a storm of bad news came in to rain on the parade. During this time, one of the worst signals came after new crude oil inventory data came in. Expectations were for around 400,000 barrels, but the results were actually around 2.4 million barrels of crude oil. This news fueled bearish sentiment for oil prices, as the question of demand was now in central focus with an abundance of supply. Adding to this, heightened COVID anxieties ramped up in Europe over the possibility of a third wave, along with vaccine shortages that could have countries tightening restrictions even further and extending shutdowns past previously anticipated deadlines. The strong trend for oil since November, extending until the March sell-off, has been fueled by optimism surrounding the effects of the vaccine. Travel would ramp up, lockdowns will be lifted, trade could normalize, and all of these things would serve to greatly increase the demand for oil consumption and therefore prices, and the makings of a decisive recovery could be observed. The reverse course for these things, with more of Europe imposing fresh restrictions and the failure to reduce new COVID infections, is the reality going into April. Following these events, the Suez Canal blockade, which has taken over headlines recently, has managed to stop oil from plummeting further. While there was much celebration after one of the ship's rudders was freed, there are many predicting that we could still be weeks away from freeing the ship in the blockade. The implications of this are even more massive than the ship itself. The longer the delay, the greater the impact on global trade and the greater likelihood of serious market disruptions. Reacting to the news, crude oil prices saw a modest rise of about 4% following the violent sell-off of last week. The reason for this is that now supply is back in question, and halting of a significant part of global trade could squeeze demand and therefore crude oil prices. For this reason, many traders are still bullish on oil for April, and are not only placing trades on the expectation that the sell-off in March was an overreaction, but that the recent events in the Suez Canal will result in a great trend for trading for oil throughout the month. With this information, let's now take a look into the crude oil technicals so we can see a better overview of the trend for oil, and most importantly, its nearest levels of support and resistance, and where the commodity can go from here. Alright, we are now in the Libertex terminal looking at the technical chart for WTI crude oil. And just looking at the yearly chart, we can of course see the first pandemic sell-off that brought oil prices to below $12 a barrel. And we've clearly made great gains since then, even factoring in the latest sell-off the other week. We can also see the sell-off that occurred towards the end of October, and then this very nice uptrend we've gotten to ride since the beginning of November until recently. This period with the uptrend is where we really want to examine closer, so let's take a look at the 6-month to get a better view of this perspective. So from this approach, it's important to note that trend lines do not continue forever, and when we take a look at the RSI, we can even make the observation that crude oil was perhaps overdue for something like this. From the 3-month, we can make out that there was indeed some bearish divergence leading to the initial fall from grace here. The break from the Bollinger Bands additionally can also point to a potential overreaction, resulting in the modest move back we've seen as we get closer to April. Despite all of this, however, crude has managed to stay above the $57 level, with some further support around where it initially sold off on March 18th at around $57.25. Beyond that, if this does not hold and the price for oil comes back down, the 57.20 cent level from February 9th will act as support. And if this is breached, traders can look to the psychological level of $55 per barrel for crude oil. The closest point of resistance from where we are trading currently is the March 15th high of $66.40. Looking more towards the upside, the March 8th high of $67.80 is the breakthrough resistance level that crude oil will need to get past in order to move on to the psychological high and next point of resistance at $70 in the short term, especially if the situation in the Suez does not ease going into April. Because we have seen oil dip slightly below its trend line and then recover to great extent, the case for a buying opportunity for oil can be understood, especially with what is happening in the global markets. Do you think crude oil is due for a bigger pullback, or will you be buying in at the current prices? Let us know your thoughts, if you'll be trading crude oil in April, and share your price predictions in the comments to join the conversation with our analysts. The discussions that take place in our channel help enrich our growing community of traders and help us grow. Furthermore, if you're interested in trading oil, as well as the top cryptocurrencies, metals, stock CFDs, and more, head over to libertex.com to make a free trading account today. The process only takes a few minutes, and our platform gives you access to the best tools used by the pros. Lastly, if this video provided you with any value, we'd highly appreciate it if you'd leave a like and subscribe to help us reach more viewers and provide more of the latest research and content from the oil market and other trade-related topics. As always, we wish you a successful month of trading in April and look forward to seeing you next time.